Forces has announced that a flying disc has been found and is now in the possession of the Army. CBR Street Gang, this is all by standing by, over.
Hello, hello, hello. Let's get the microphone check out of the way, and we're going to get rolling here in a little less than 2 minutes. Let me know if you can hear me across the various streams that are going on here, including YouTube and Twitch. And we're going to get started fairly soon. So, yeah. Oh, I forgot to mute you guys. So you can hear me over there? Good. Yeah, then if you can just let me know in the various chats, in particular YouTube. I don't think anybody's, no, there is a few in Twitch. If you're in Twitch, you can let me know if you can hear me over there as well. Excellent. Right, we're gonna get the music under control here, and we're gonna roll right into our Friday live stream. Should be a bit of a chill one, a little laid back, look at some charts, talk about some things regarding some Bitcoin news coming up, and kind of get a feel for direction here. Let me pause that on my side as well. Hello and welcome to Landy's Crypto Corner. Today is January 5th, 2024, and it's a Friday market update live stream today where we are going to take a look at Bitcoin. We'll also take a look at a few other things like Dixie Gold and the traditional markets. and we're going to discuss a few things regarding Bitcoin, some of the news that's beginning to bubble up regarding potential spot ETF approvals, and then we're going to go from there. So let's go ahead and roll right into it. Since we last spoke, we did see a move off of around the basis band, but off of the lower second and third through the weekly here. Weekly supports swing this higher low, where we now have a higher high in place, and then go back up and test the upper second standard deviation, falling just short of this close open high here, which is at 44,972, so almost $45,000, which was this wick high over here. So big area of resistance overhead. We did see the price here on spot trade through the monthly overhead to around $46,000, and then spike directly into the monthly resistance at 45.5 before heading down. And then we got the nice up candle to retest, swing the highs again, and now things are just kind of going sideways above this weekly here at 43,200. We did see in today's price action a little bit of a move down to the lower first again, which is coming in around that 42.2 region. The low of today's coming in at 42,450, so around 42.5 basically on most exchanges. Now, this, not to be unexpected after a pretty, decent rejection off of a major monthly level. And we are just seeing Bitcoin kind of going sideways within a range as denoted by the Bollinger Bands here. Volatility is not really maintaining itself in terms of its upward trajectory. It's going sideways, which was, what we expected to see if Bitcoin could hang in and around the basis band. Now, as I had noted in Wednesday's live stream, the upward potential of spot price in this case is still there, as long as Bitcoin is closing above the basis band of the Bollinger Bands, and in particular, the bias to the upside will continue as long as if Bitcoin can close rather above the upper first and of course the upper second. Now, when looking at our Bollinger Bands, we can see that in today's price action, we have swung that upper first standard deviation at 44,000 to 44.1. And if we do see price close back above there, we would target back to the highs again on a close around that $45,000 region by the upper second and up. So in particular to the monthly at 45.5, the swing high now at 46,000, and then the monthlies overhead at 47 and 48,240 to 48.5 initially, and then probably the low $50,000 region. Now, if the basis is lost, not all is lost for price or momentum in this case from the Bollinger Band and structural point of view. Now, you will see momentum oscillators and the like turn down, but in this case, I would be targeting somewhere around the lower first here at that 42,200 to 300 to this weekly here at 41.8. Below there, we're looking for another run to this prior higher low around that lower second, somewhere in the 41.4 region to the actual lows over here at around $40,000 or so. There is a pretty big range on the lows there. You could take 41 to 41.2 to 3, so about $1,000 range between closes and wicks, or you take just the bottom side of the range somewhere around $40,000. If that is lost, then we start looking to that same area that we've talked about many times, 39 at the weekly to 38,500 at the monthly. Below there, 37.7 at the set of weeklies down here to 36.2. That's the biggest area I would look for first before even entertaining a move back to the monthly down here at 35,000 to 34,750. It's just too much of it would have to be a pretty hellacious dump off to even get there. Not that it's not out of the question. We've seen these things many times before, but there is plenty of players in this space that would want to pick up at these various levels of interest or areas of interest to the downside should price, even get there. And in order to even get there, we got to see Bitcoin closing below the weeklies here at 41.8, taking out the daily lower second, losing the wick low of this current consolidation range at 40K, and then getting through all that support. So, that's not my first take on what's going on here, especially considering the news that we'll talk about in just a minute. But in this case, to the upside, in some cases, if we do see the monthly swing high here at 48,240 to 48.5 get taken out with authority on any kind of a daily or higher term time frame close, I wouldn't be surprised to see price marching right into the 50s and higher. So be aware of that. Volatility is to be expected. Is it going to be, really hellacious volatility? We can get a bias on that by looking at our regular charts, so the Bitcoin in 60 seconds chart, going to the weekly here. And, we'll talk about the levels again in just a moment and this support structure that I have for the 4 hour. But you can see that the upper second here on the weekly is at, roughly 47,500. A good push into this area and above would be around that monthly area, like throwing wicks above the upper second standard deviation on the weekly would be, somewhere around that monthly swing high area. And just for those that may not know that are a little bit newer, I do have some newer people here. The monthly swing high for Bitcoin over here is that 48,240. This was the lower high after the higher high that then was preceded or followed by, was preceded by a higher high and followed by lower lows than the prior lows and the low that was just painted here, which could have been a higher low, but it was avoided. It was a swing low to a swing high, but not a closing low. It then dumped off to the now macro low, but what was a major low. Then we got a lower high structure to a higher low, putting in another major low, solidifying this as a macro low, and then up and over that upper second standard deviation. Look, context is everything. When Bitcoin closes above the upper second standard deviation, it's official. We are seeing expansion. You can see it on the Bollinger Bands. Here on the monthly, you can see it on the BBWP price volatility metric down there and the charted version right here. Look, we're getting price expansion to the upside. I do expect this to lift off pretty soon, followed by the 2-month here, which is going to most likely lift off pretty soon. We also are getting close to that upper first standard deviation on the 2-month, and that is at that $48,000 level. So while there might be pullbacks and maybe even, within the context of the current range, things can come all the way down to, guess where, in my opinion, the upper first, and even swing below it on the monthly. And that's coming in at 34,500. So, 34,500 to 34,750 that we just talked about at the weekly down there. That being this area below all this support, we have a monthly and weekly, 35,000 at 34,750. We can see that area swung, and it does nothing. It does not cool this structure down. It does not do anything more than put in a higher high in relation to this high, thus solidifying trend to the upside. And the next thing that you look for is a higher low. Now, swings can happen, but you're looking for higher lows at a close. It's only once this low would get taken out that you're looking at not a downtrending structure, but a structure break that's more likely to lead to a consolidation before trend is decided upon. So we are looking at the beginnings of a run up in Bitcoin. This is, there's no denying it. For those that are in denial, if you are one of those, if you are in that camp, I would strongly suggest that you reevaluate your position and or have very clear invalidations for your thesis. So that is something that, there is invalidations for mine as well. And my invalidation would be taking out the macro low. I think that is highly unlikely. And even if the macro low, and I'm talking about on a close. So we need to understand that there is a difference between swings and closes. And swings can get very violent. We've seen it before. And of course, if we saw a swing below the lows, it would not be out of the ordinary from a bear market perspective in terms of prior cycles. Now, but this is a bull market, Landy. It's full bull. We're going, right? I wouldn't argue that this is not bullish, but this is not the bull market that you are going that the media is going to hype, that everybody's just going to be green button all the way. That's only really going to happen when FOMO kicks in above the current all-time high for Bitcoin, and that's at around $69,000, depending on your exchange. So, yes, this is bullish, but keep in mind, this is all inside bars on, something like a yearly. We are trapped in between the bull market bars of, we got the bull market high of, guess what, 2017, and the bull market high of your closes and wicks you can take if you like. But this would be the bull market high of the yearly on 2020 or in 2021. So, and then we had the 23 that got very close. Now, I do want you to take a close look at this yearly real quick here. I want you to note where the yearly closing highs are, because this is important, because it is in the local range, at least within the vicinity of price. And we are going to snap a horizontal ray down here, not a vertical ray. He's horizontal this time. Never mind. That's an inside joke. Anyway, 46,211, and the current high did try to get up there, but it did fall short of the $46,000 level here on spot. And I do value spot, especially now that Coinbase is by and large, there is a couple spot ETFs that are not going to use Coinbase as their custodian, but by and large, they are, using Coinbase. So this is the chart that you're going to see all the time from me, and not derivative charts. Spot drives this market. Derivatives do not. And I want to bring this up now that I've breached the topic of derivatives, because I want to bring up open interest. Open interest is here on the hourly after the big dump off. We talked about this on Wednesday. It is in divergence territory, especially when looking at like the 4-hour, which we'll look at here in just a moment, as I struggle to find, because this is running the old version of the toolbar on this particular website. But we have price. Let's go ahead and make this a little bit more visible. Excuse me, just one moment. There we go. So we have the big price dump off here. And then now we've got, basically a retest of the lows that were lost, right? So we have a retest nearly to the dollar over here. And then it's begun to come back down a bit after the move back to the mid 44,000 to, almost $45,000 region here to test this consolidation at the highs, or at least the low side of it. And that was the primary target for me off of these lows anyway. We did discuss this around above 44. We're looking roughly 44.5, possibly up to around that $45,000. But realistically, this is the structure that I was expecting to be tested. It did get tested. And then we saw a big dump off right after. Nice little liquidity grab. Now on the other charts, you'll note that that's right into the weekly zone between 41.8 and 43.2. But it's more about this here. This is derivatives open interest and its totality for what Coinalyze is tracking. So you're not getting CME. In this case, you can see the dump off came down to under 11 billion in the around the 10.4 to 10.5 billion dollar level. It then rose back up and tested in terms of price structure. When we're looking at this low side structure over here, it swung the lows and the highs of the open interest over here at around 11.3, 11.4 billion. So about $1 billion came into the market in open interest contracts. And this was trading at the level that we saw spiked at and swung on the hourly over here in that 41.8 to 42K level. Obviously, it did swing down almost to 40,600 or 40,500 down here on the wicks. This spiked back down after reaching the open interest level of around that 11.3 to 11.4. We saw a big cascade of liquidations on some exchanges, but it was more of a lot of positions just coming off the board after the bearish retest up here. And then we saw this come down again to around that 10.5 billion on the low. And now it's going sideways as price just kind of goes in a little bit of a downtrend here on the hourly. Now, I'm looking at this as something that you should pay attention to. It's going from that 12.3 billion down to 10.3 billion is a $2 billion wipeout of OI, which is healthy and heavily spot driven. When it did happen, it was a big dump off. It wasn't like a derivatives contract dump off. In that case, it was spot that led to the derivative contracts that were building up there to get liquidated when spot dumped down. Now, in this case, I want to show you that the daily is, again, I want you to be very, very observant here when it comes to this. Note that the $10.5 billion level that has continued to get wicked is the same level that Bitcoin was at when, getting to those open interest levels, which is the same area at around that 31,000 to 31.8, which was at the time, if you were here watching this channel and my analysis, the 31.8 was the breakdown candle open that really set the bear market in motion. That was the big liquidation cascade, the Luna stuff, whatever you want to call it, right? It's all that stuff. And 31.8 was the close open from month to month that broke the bull market lows that then turned that lower high, solidified the lower high that then led to lower lows on the monthly. We got up to around this 10.5 billion and in that area, dumped off, and then open interest has worked its way all the way back up to this same area. But because spot is driving price up, spot has moved price substantially away from that 31.8 area, utilizing with the same amount of open interest being in the market now on the low side structure, coming in at like 40,500, almost $9,500 higher, right? So for those, this is something that I really need to stress. I see a lot of big accounts on Crypto X or Crypto Twitter, if you've been around for a while, and Crypto YouTube, that really drive home this open interest readout and they actually take the view, and the reason why they pay so much attention to this is they take the view that open interest is driving this price action, and they're foolish. They're fools. It is not. This open interest is not what is driving the price action. The reason why there is such a markup is because of spot, because spot drives this price action. We have literally the same levels of open interest right here on the lows at 10.5 billion with a price markup of $9,500 per coin. So if open interest was the real driver and spot wasn't, then this would not be the case. All right. So I did want to address that. It's silly, and I think that that people that look at the market that way are going to be absolutely destroyed when the ETFs start trading. When they start live trading on exchanges, you can go to your brokerage account and get one of these big ETF. Maybe you get one of each. Who knows? Who cares, right? I don't care what you get. Get whatever ETF you want. They're likely to get approved, sometime. I don't think today. It's too late. I think they have a few more things to wrap up. From what I'm hearing, it is the expectation from within the industry is sometime next week. If it does not happen next week, it is highly likely that it comes before Q2. if not at the shift into Q2. So there's not much else to do though, from what I've been reading, from what I've been hearing, and then for those of you guys that are in the industry, you know what you've been hearing, right? Is that this is pretty much imminent. We already have sales pipelines opened up. There's already people talking about it to their customers, going in and giving presentations about the future of this stuff for, last year coming into this year, talking about this stuff with companies having their quarterly, bi-yearly and or yearly meetings with companies, employees for 401k and IRAs. So that's for managed and self-managed funds. What did everybody talk about, right? What did you guys talk about, right? So we're all talking about Bitcoin ETFs, right? That is what, it's all dependent on when they get when they get approved, right? They get approved soon. Many self-managed accounts for 401ks can go right in and have their manager get those, or buy approved funds. They're already, just so you guys know, there's already a space for approved funds in 401ks for these ETFs. So if you're not familiar, you don't have a 401k, we're going to go to, Landy's going to just chat for a moment because this is important. We did the basic analysis that you need to know about. If this level breaks to the upside, blah, 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 breaks to the downside. That was at the beginning of the stream. So this is important to understand. If you have a 401k, in many cases, you have specific baskets of items that you can choose from in that 401k for your company and whatever company they are using. So there is specific, mutual funds. There's specific assets and indices that you can be in that are on that approved list, depending on the portfolio manager, the trading and financial institution that is backing the liquidity against a lot of these things that are going into these 401ks. But basically, you can have a hybrid where it's fully managed, or you can self-manage some of it and choose where things are going. And then you can also, depending on, the IRAs and stuff like that, there's all kinds of different packages and levels and stuff like that. I don't want to get too far into this, but what I'm trying to say is what's already on that, there's already Bitcoin ETF related things that are being approved. So once these ETFs are approved, you can either on a managed basis, the portfolio manager can roll into that a percentage of those portfolios, and or you can choose yourself on the managed side. The other thing that you need to understand is a lot of these funds or mutual funds or commingled funds, whatever you want to look at it as, are already looking at allocating portions of liquidity or portfolio to ETFs, Bitcoin ETFs. So this is a lot of liquidity coming in. And for every, new creation unit, spot has to be taken off the market because that they are going to match each creation unit with spot backed in the custodian account or custodial held accounts. So now the arbitrage between the two is how they're going to make money. It's not on the price, and there's a whole bunch of stuff. It's not on it doesn't matter how high or low the price is. It's the arbitrage between the two is where they make the money, along with management fees for these ETFs. And they're very likely to be approved sooner than I think people thought. Maybe by the 10th, or sometime before the 10th or 11th or whatever it was. And then we go. But one of the big things is some of this is being held up not just by the SEC, but by some of the players involved because, the sales pipeline is the big thing, and that's what was being worked on all Q4. So for those of you that are in the business, you understand what was going on, and this is not. There's no surprises here, is what I'm trying to say. So now, how is this going to affect price? the big thing that you need to understand is the chart does not change just because an ETF is launched, right? At least not the long-term charts. So when looking at something like that monthly that we just talked about, when we're looking at the monthly, this chart does not change. My outlook on this chart does not change. There is no there's no other factors to take into account because of X amount of dollars could possibly come in, or they're gonna try to the big narrative right now is they're gonna try to dump the market to get it cheaper. Why? They don't care, right? Like that's not the main. If the market dumps as soon as the ETF launches, which there's going to be volatility, right? There's going to be other sides of that trade, right? The liquidity's got to start and then go somewhere. So when it initially gets fired up, you will have big movements, right? Because it's establishing its baseline. There's going to be other sides to those trades. And there's going to be a massive derivatives market on top of all this, by the way. And that derivatives market is the options markets. It's the loan side of the markets. It is the contract side of the markets. So understand this. Looking at open interest on these Mickey Mouse freaking exchanges is not going to help you when these things go live. There is such a large the pool of money, like $12 billion, is probably, you'll have that on like the smallest Bitcoin ETF player and the options markets alone for open interest. I mean, this is just not even comparable, right? So what's really going to become more important over time is the actual underlying fundamentals. What I think is actually going to be really important in the future here is monitoring the quantitative, the quant data, right? So, and in conjunction with the price chart data, and keeping in mind that quant chart data, most quant firms will start integrating overall open interest. So one of the things that I also really love to see, and this is something I mentioned to everyone here prior, is that we have CME has taken over the open interest for trading on Bitcoin here from Binance in a big way. Being over $1 billion up, $1.3 billion more in open interest is a good thing. And you're going to see a lot of, you're probably going to see an uptick in OI that kind of sets the floor for CME once ETFs launch. And then you're going to see that liquidity begin to have to be tracked in terms of open interest on each of those ETFs. And maybe somebody will do something smart, like have an aggregate number for the ETFs in totality, and then add them as more get approved. Because if you think that these first batch of ETFs that are coming out are going to be the only ones, you're sadly mistaken. It's not going to be. These are not going to be the only companies. In fact, there's more applications being filed day by day. So there's going to be cash creates. You're going to get a few that are going to be going for the in-kind as well pretty soon here. Even though they're waiting for these ETFs to be launched. The cash creates are what is going in right now. And once that's approved and the ETFs are on the market and they're trading, what you're going to see next is cash. Those same companies are going to try in kind, and or you're going to get some new players in the game that you've never heard of before that are going to come in with in kind, and that is going to be a selling point, because right now, they're going to have to battle the SEC for that one, because the SEC prefers the cash create for tax expediency and for management expediency. So it makes sense. I get why they want it that way. But when you go to redeem, if you're going to redeem those shares instead of selling them, you're just getting cash back, right? So you might as well just sell the shares. It's the same thing, right? So, and when you're selling and redemption and two different things, we're going to talk about that stuff as time goes on as well. But often even in industry, selling and redemption are seen the same way. But That's not the point. What you're going to see is redemption options out there for redemption of Bitcoin to the end user or the holder of those shares. And that is what is going to be happening. They want to get this one through first, and then they're going to move in that direction. So be aware of that kind of stuff. A little bit of a different conversation. You know, Landy usually gets on here and drones on and on through the time frames about Bitcoin and where it's headed. Today, not much has changed since our last stream. Not much has really changed since the staring at charts video that I put out. I do apologize. Yesterday, I did not have a staring at charts video. I was very, very busy helping a family member build one of the most badass computers I've built in a long time. So anyway, and then today, you know, it's still vacation time for the kids. So I was a little late today getting to the live stream here, but you know, there's quite a few of you that have been able to join that usually are a little late to the other stream. So I'm happy to see all of you here. Now, daily, we can look at momentum here. Bitcoin is going to remain with upside momentum as long as it's closing above $43,000. It is closing, you know, or it's trading rather above there. It already tested around that 42,450 right now. You know, if by close today, basically above the basis band, and the momentum pivot should stay up to the upside here. If we do see the highs get taken out on a close, this will become a higher low. Not a higher swing low, a higher closing low. So in this case, if we do start seeing Bitcoin, you know, crawl back above the upper first here at 44 to 44.1, I would look for it to head up and test in and around this close open. That's where you should be paying very close attention. That's basically 44,972. It's basically $45,000. Watch that area closely. If we do start seeing closures up there because of the way that the closing candle structure is looking right now, you are going to want to take this as a higher low. So you would have higher low, higher high, higher low on a close. Yes, we did have a swing lower low. Not relevant until we see that swing lower low get taken out, right? So understand that. Your structure would still be maintained as an uptrend on a closing basis. The swing lower low being the invalidation for the current move to the top side. You can front run that wherever you like. All right. That's up to you. But the swing lower low, if that gets taken out, then we have to pay attention to the actual lows of the range, which is not far away from that swing lower low. And that is coming in at that 40,150 here on spot. You can call it $40,000. That is where it landed on most other exchanges. If we do see a higher low, don't fight the trend on a close. The next, even if it doesn't close above the high at $46,000, you still need to be looking to the top side. That is, you know, it would be above the upper first and second and maintaining above the basis and this area of support at the weekly at that 43.2 to 41.8. So you're meeting all the criteria for looking generally up and to the right until the invalidation is hit. We also have momentum pointing that way. And we do not yet see a reversal we don't see BBWP under the moving average, and it does not have a negative slope. It is tentatively upward sloped, but more importantly, the moving average is moving up still. And as long as Bitcoin is trading above the basis in and around the upper first, it's more likely to go up than down. That is going to be the daily analysis. I will have a staring at charts video for you tomorrow where I will spend about 10 minutes going through the various time frames. We went through most of that on Wednesday this week. And, you know, this is something that I spent a lot of time on. I didn't even look at anything else in the markets on Wednesday. So be aware that, you know, the upper first has been tested this week, right? That was down at that 40,005 to 600, right? We talked about this the other day. So upper first on the weekly has been tested. That gives us, as long as Bitcoin's closing above it, it can swing below it, but as long as it's closing above that upper first at 40,000, you know, 500 to 730 area, we are looking at this having a high potential to continue to run the highs at its current high and higher. So $46,000 to the monthlies up here, right in between that monthly close at 47,100 to that monthly swing high up there at 48,240 to 48.5, possibly more, up to that $50,000 or low $50,000 region. One last thing, for the current move, when looking at the weekly, you know, you can pull a few different fibs, but if you want to take the current move, this is, you know, kind of where we can look for areas of interest and invalidation. You can see that the extension here for the 1272 on the weekly for this particular move would be at around 54,000 mid, you know, so mid $50,000 region. So if we did see a breakout above the one extension, so basically reclaim 46, get through the overhead resistance, take out these highs, you know, we're looking somewhere around the low $50,000 region, especially when looking at the weekly here. There is an order block area prior to the lower lows on a weekly, right? So there is a big area of resistance, and this is roughly coming in at right where Bitcoin has tested on the weekly. And this isn't something that I showed you guys or talked about in the last stream. So it is relevant to be paying attention to this area of interest. So on the low side, wick, we've got the 45, 469, nice, of this particular order block candle. We've got a high side area of around $50,000. So again, we push through and swing this high over here at 48,240. I'm looking into this area here in the low $50,000 area. That's where I'm getting that from when I say it. We can also see it head up a little bit more to like $52,000 because there is a cluster of candles in here. There was a prior high put in here as well. We can see that we have regained this weekly low, you know, a few times on closes here, or one, two, possibly a third time at this 888 right here at this low. There's also a nice spike low from once the spring was hit off the Wyckoff accumulation on the daily down here from the bull market. We saw that the spring was hit and then it ran to these highs in the low $50,000 region, and the lows of this the current first big red candle low is coming in right at that 888 of this current fib pull for this current move up. So above this area, you then start getting into like 53,000, and then the 1272 basically in the mid $50,000 region. So pay attention to that. Should we see this 48,240 break, that's where we're going to be looking. $50,000, low $50,000 area. Is it possible that it could go up and hit the mid 50,000? Sure, maybe even more. Maybe up to the 414, where you see another weekly cluster and a couple swings on wicks and some close opens there at around $60,000. So that's also going to have confluence if you pull the whole structure as well. You're going to find areas of interest up here around the highs at the 1272 and the low $60,000 to $62,000 region up there. So we do have some precedent to be looking at these areas and paying close attention. I must have lost somebody there, bored you to death, and they left the stream. It's all good. Yeah. So let's go ahead and take a look at a few other things here before we open it up to the chats here. And I want to see what you guys think, what you're seeing. 44K also taken just now. Very nice. Very nice. The upper first has been reclaimed in the lower term timeframes. Let's go ahead and look at currencies and bonds. We're going to look at, oh, look, it's Dixie. Dixie put in a low. Where's it finding resistance on a close? Right over here. Where did it swing on the wick? Hey, look, that's an order block. All right, so we have on a closing basis, resistance right here at this prior lower low in this case because of the downtrend. So 102.65. Swinging this area and finding resistance right around the wick at 102.50, 102.45 to 102.50. And then we had the wick come in all the way up here to this particular inverted doji order block candle, or inverted hammer order block at the 103 region. It actually hit right at the wick low of that candle at 103.11. So this wick hit this wick low. If it does start to pass this doji here on a close, and especially take out, well, I don't think it would do this right away, but the upper second is lining up with this order block inverted hammer doji wick high, which is coming in at 103.72. If it does regain that, I'd look for a retest in the low 104 area, swinging around these areas where this failure came in at 104.20 to 104.25. Above there, we look to 104.50 to 104.60. And then above there, we can start looking at the 106 lows over here. It's actually 105 lows. Sorry, not 106. I don't know why I said 106. We were just talking about 104. We don't skip 105. In this case, it would be 104.84 to 105. So that's what I'd be looking for in Dixie. If it does lose the lows here at around the 102 region, and this particular low over here, I'd be looking for a run back to somewhere around 101 to the 150 low here by the lower second, and then we come back to it later. What is momentum looking like? Momentum is up as long as it's closing above 101.11. We'll come back to that on Monday. Let's go ahead and take a look at gold. Gold is consolidating in our zone here that we had. Let's go ahead and put on this messy chart. This one's a messy one. Beware. It's not as messy as some of the others, but we are still consolidating in this big zone between 2016 and the highs being put in up there at 2081 for this current retest. Now, this retest was on higher highs, throwing some bearish divergence here, I believe. We have a cool down and in price action as it has traded back to the basis band of the Bollinger Bands here. And it's still an uptrend until we see this lower first taken out. If this does get taken out, I would target right back to this prior low. The lower first is currently coming in at that $2015, $2016 area. If it's lost, I'd be looking to the lower second at around 1990 to this low side structure into this low over here, somewhere around the 1980 region. Maybe even a swing of this area down to the 1965 wick over here. If that area is lost, then we're looking for a big markdown. We're basically looking at more than $100 discount here. So, into the mid to low 1900s. So it's downside angled on any closes below 2074 right now. A drop of $100 would put it right there in that lower second to higher low structure in terms of the longer term timeframes. This was a swing. This did not actually close, like barely made a closing low. So technically, this was a deviation low on a close, and then it put in a higher high on a close, but everything's remaining within this giant swing wick high. So I do think that this is going to consolidate a bit longer, and then we'll come back to it in the early parts of next week. We've got traditional markets. Dow is still above its prior all-time high. You see now a cool down back to, well, it's more of sideways price action, but you're getting the cool down in the Bollinger Bands as the basis rises to the price that we are currently trading at. It's not quite there. So to the downside, if it does lose the basis, then we're looking back to the prior all-time high. Basis is coming in at 37,220. If that area is lost on Dow, I'd be looking back to the all-time high area. Basically anywhere between this this close here at 37,073 and 36,952. If that is lost, then we look to the lower first. Lower first would be an area that's kind of in no man's land. There is closes around here, though. So a swing down to the lower first is the next big area that I would watch at 36,750 or so. Below there, we're looking to the lower second, comes in right in this little bit of a consolidation here. So lower seconds coming in at that 36. That is 36,260. I had to get real close to the computer screen to see that. All right. Not too much more to say about this. Momentum has turned down. I would not look. It can stay up here. It can get a bullish reset of momentum. As long as this is trading above the basis, there's nothing to be bearish. There's nothing to be bearish about here. If the basis is lost, then we can start looking at this higher low over here, evaluating that. If it's lost, then we're looking for either a swing of that down to the lower first and or for price to head back to this prior consolidation by the lower second on the daily. All right, I think that makes sense. Areas to watch right now would be 37,220 to the to basically this support here at the prior all-time high at 36,950 or so. Let's look at NASDAQ. NASDAQ has already mean reverted pretty hard. This was the big criteria that we were looking at last week. So we had this close right here and this order block. You'll see that the close and order block, the order block got basically closed right on here on the January 2nd candle. Now the basis was lost. We're looking at a lower first tap. This could turn into a morning star reversal if it closes like this. That doesn't mean it's going to, but basically take out the wick low, and we're likely headed down to the 1611 to around 16,000 area by the lower second, which is right over here in this consolidation. If that area is lost, I'm not really concerned about anything with NAS for longer term, unless I saw this area here at around 15,700 dropped. If we see that, then we're looking for a long form consolidation. We're also looking at, at least on the daily. So, we're not looking for immediate. We would be looking for bounces, but not like immediate trend change on the daily. In this case, this is a downtrend breaker. So this is, or an uptrend breaker rather. We have our uptrend here. We're now going to, no matter where it puts in a low, it's going to be a lower low than this last low over here on a close and on a swing. So that is something to pay attention to, but this isn't inherently bearish. What we're looking for is some kind of move off of the lower first. Maybe we've already seen the extent of that in the lower term timeframes, with the high coming in at 16,415. If we do see that closed above, then we're looking for things to move back to the basis. That also would put in a low if it does close above there, and then we'd be looking somewhere around 16,560 to 16, this top side initially, like 16,680 to 16,700 up here, where this wick low upper first area is coming in 16,700 to 800. So just take it level by level in the lower term time frames, and then come back to it. If we do, if we do see that low drop, then we're looking to that lower second, somewhere around 16,000 to 16,100 at the high side of this consolidation structure. Momentum is going to be pointed down, but this is very likely going to get a nice momentum reset if it can start picking itself up, putting in a low there, and then we come back to it. Now you might see that volatility on this downside move and the trend break are going to be like, oh no, it's definitely going to push down further. Well, it's in context. This is mean reversion back to an area of support on the lower first standard deviation. So it's volatility within the bands, not volatility expansion beyond the bands that is breaking down from a support or breaking out of a resistance area. So keep that in mind. If you have questions about what I just said there, I will have you ask, or I will prompt you for those questions if you have them in just a moment when we finish up with SPY. Hello, SPY. You never made a new high, SPY. All right. So in this case, we're getting the same type of look, but we have not seen SPY come back to the lower first. But guess what? This is super structured. If we come down here and look, if this low is dropped of this particular doji at 466, where are we looking? Lower first at 464.73 or so, 465 area. which is basically very close, but it is a fairly substantial move for SPY. If that is lost, guess where we're looking? Lower second, right at the prior consolidation. Same thing across the board, and this is at the 460 area. I would be looking for bigger bounces in that area between 460 and 453. If this does put in a low, it's got to happen on any close above 470, 86, or 96, so basically 471. Then I would be looking right back to test the low side of the high that was just put in here at the upper first, which is lining up perfectly as it stands right now. That is at 475. Above there, we're looking for the high here to get taken out at 477.55, and then go and test the upper second, which is at the all-time high there at around 479.98, so basically 480. Above there, we're looking for it to run, 490 and then 500. Pretty easy stuff. We do see this is dropping off the map, 477. We just talked about that particular area. It's basically 475, 476. I would say 475 would turn this back up in terms of momentum. We are seeing price volatility pick up, but it's all within the look of consolidation and mean reversion back to an area of interest here at the lower first. It's about failures, bounces that fail. That's really what you got to pay attention to. So this area was just dropped on a close, but pay attention to the high and low of this candle, and in particular 470 to the upside if that is taken out on a close sometime next week. All right, that's going to do it. When the weekly's open, we'll cover it on Monday. We'll cover some of the longer term stuff because there is a bit of a shift going on, and we'll come back to it. And we'll look at some of the macro. We had Bitcoin in the lower term time frames go up and wipe out some late shorts here, it seems. We had a wick high up to 44,500. So we got our test that we just talked about in today's price. So nice markup up there. Nice sell-off after. We can take a look at volume real quick. Probably some decent volume on this as well. Let's go ahead and look. Yep, very decent volume. In fact, we have a nice high volume candle, spike low. This started to reverse, has not passed this high volume candle. If this high volume wick low, this is easy. This is so easy right now, man. So easy. If we see price drop this wick low, which is a high volume wick low, what are we looking for? We're looking for the close open down here, which is just below it at 41.8. And that's right at a weekly. That's a huge level. To bring this into context, like when we look at the 15-minute chart, the biggest, highest volume candle area on the 15-minute closed right on the weekly there, right? So that is this candle over here at 41.8. If this candle is dropped, specifically at 42,450 on a close, it's lost. Then we're looking for, 41.8 to this wick low coming in at 40,625. This is so easy. If we get this area here, this high volume high taken out on a close, we're looking for, these are areas of interest. Doesn't mean the price has to go there, but it's generally what price will do because of the way order books work, the way that the liquidity is going to be laid out in the order books when you take out areas or fill orders. So in this case, we're deconstructing the order book by looking at the chart. We don't need the order book in order to deconstruct areas of interest. In this case, the 44,450 taken out on a high, nice higher volume high put in. Then we're looking locally. Doesn't have to be volume based. We still can look. We have to take support and resistance into account. We're looking at 44,800, right, which is the low side of this structure here, and then the higher high that did not close on a higher high basis up here on the 15-minute, which is coming in the $45,000 area. In particular, this was the 45.5 monthly strike up here. But I want you to note when things were up here, we did already talk about this. Nothing closed above the wick high that was put in over here. It was a swing at 45,432 this closed at 45,423, so about $10 lower than the wick high that was being formed, kind of governing this area. And there's 2 wick highs, so this was 1, 2, swing and reject, take out the low, get expansion past the actual low, which is what I'd be looking for. This was just tested today, and then tested again on higher volume. And there's an order block over here. So lots of stuff to pay attention to on the lower term time frames if you're scalping or taking, basically if it's under a day trade. If it's a day trade, you should be scalping. You should not be just opening random swing positions, especially in areas that are not yet either expanding or contracting and finding support. So, all right, we are going to look at a few other things here. But first, we're going to look at the chat. And we're going to turn on the tunes while I go ahead and look at chat here. And get this rolling. All right, so let me go ahead and peruse the chat, see what you guys are looking at. This is the public chat. I can hear you guys talking over there. I did not mute that side of the stream. If Jimmy can do that, that would be great. Okay, thank you, Jimmy. I appreciate that. So for public chats here, we got Roka, hello. No name, hello. You're in 2. I just heard your voice. Oh, no. Okay, no, you're not over there. Bobby, hello. Spin, how you doing? Don, welcome. Sam is here. How you doing, Sam? And Cheryl is here as well. At least in the chat, there are quite a few of you that are idling. If you would like to chat, go ahead and sub the channel if you haven't already. Come on down and join us in the chat. JR's here somewhere. The coin of our people. Oh, you want me to look at TRB too? Everybody's tripping. Oh God, just crypto with the dirty minds over here. All right, so that's a killer saxophone riff thing going on here in the background. I did not turn that all the way down, huh? Yeah. So yeah, I take it you want me to look at people. Did anybody have any questions about what I had mentioned on the bands and volatility? Because I thought I heard somebody say something for those that are in the voice stream that was not muted. So I heard somebody inquire when I had mentioned in NASDAQ for the daily that we are seeing volatility move up, but we're seeing contraction. So this is still mean reversion. I should probably read the chats here because Bobby is alerting me to, I think, Cheryl's question. When you say mean reversion, what does that mean? How do you tell? Okay. Okay, so mean reversion is a revert back to an average, right? In this case, the 20 simple moving average, which is the basis band. So mean reversion is price moving back to a mean average of some sort. Now, in this case, how this interacts, and we're going to use NASDAQ as the example here. How you need to look at this in terms of the bands is we are, it's not as I didn't want to get rid of the bands, I want to get rid of volume. I just moved volume earlier today. So, all right. So when you're looking at mean reversion, there's also a few different ways to look at it. We can say that within this range, after the breakout, we've mean reverted back to, it has not yet mean reverted back to this range high. So you're saying it's coming back to this area, or it's returning to its mean. Now in this case, we're getting compression of the Bollinger Bands. and we had mean reversion. So we had a pull away from the basis band and then a mean revert back to this basis band, which is an average. It's a 20 simple moving average in this case. Now, I still consider this mean reversion because it has not reclaimed or bearishly reclaimed these highs. And if it does, then we've mean reverted back to these highs, and we need to be aware of this low over here. Okay, so this is realistically from here, we would then be below the basis band, right? So you mean revert back to this high. If it loses this low, look at where the bands are. That would be below the lower second. That would be pulling away or expanding away from the basis band. So what you're seeing here, I still classify this as mean reversion, except it's mean reversion back to the base. I give it a zone. Mean reversion back to the basis, lower first. You're looking for possible volatility uptick, but its volatility is increasing between the bands as they compress. So there's two different things going on here. Price is mean reverting, right? And then we have right now volatility compression because we had a big expansion of price. It is mean reverting back to where it compressed to, right? Which right now the tightest compression came in around the lower second standard deviation of the current band readout. So in this case, we've mean reverted nearly back to where it compressed. Now we're getting price volatility expansion within the bands because you're going to see volatility tick up. We're not necessarily getting expansion of the bands, or we're not getting expansion above or below a horizontal resistance. For instance, if we got expansion above the highs, that would be expansion of the upper second standard deviation past the highs. We're getting expansion of price within the bands, not beyond the bands, that then trigger price expansion in a specific direction. Either, down below this low here, which would be below the lower second, lower third, thus targeting lower prices, or above the highs, that would be targeting higher prices, which would be, in this case, more new all-time highs, right? So in this case, you will see BBWP expanding itself because this is price volatility is expanding within the bands where it is pulling, price has pulled away from the basis. So you're going to see BBWP go up. But because bands are compressing, it's not an expansion phase. This is still a compression phase for the bands themselves. You're getting price expansion down to key levels. Lower first and lower second are more than likely going to be the bouncy areas. If we do start seeing closures below the lower second, then it also has to take out this low over here at 15,700 basically to get actual price expansion or an expansion phase to the downside. So that's where understanding price volatility within the bands versus price volatility or expansion of the bands are the next area that I'm going to be moving my discussions into, so that you guys understand that when volatility of the bands, or the bands are wide set, meaning that we've had expansion, we're in an expansive phase, volatility naturally increases with that expansive phase, meaning that price movements are going to get larger and can remain very large and to the upside and downside, and still remain either bullish or bearish depending on trend and where things are on the higher term time frames. So you'll have to let me know if that makes sense, or if you'd like me to continue with a little bit more explanation on it, or if there's specific questions you have about what I just explained as well, so that I can expand upon it for you. Let me know. Like, did everybody else understand that it makes sense? Like Spin, Don, Bobby, Roka, Sam, for those of you that are actually chatting, did that make sense to you as well? Along with Cheryl, because I know that she specifically asked about it. And no, it's not a noob question. This is pretty advanced stuff. Hey, there he is. Volatility. Okay, so yes, volatility does cause expansion, but volatility can also happen as bands compress. Yeah, as the bands compress, you can still have volatility moving because the bands are moving from a very volatile position, so price can remain very volatile within that. As the bands compress, then you're looking for, that volatility to still remain in the during, and then it starts to get lower and lower as the bands compress in on themselves. And then you're looking for closures outside of the, lower first, lower second for expansion, especially when they are around support levels. So that's, you expand through it or into it. In this case, closing below the lower first would have price volatility pick up towards the compression or the compressing lower second right into support. So it's more than likely going to be a bouncy area. Same for the upside. It would more likely be, put in a high until we saw consolidation and or a closure below, in this case, the lower second that takes out the lows of this support area. Then we'd be expanding through it, not only with the bands, but with price volatility. And then the same goes for the upside. Take out the highs plus the upper second, you'd get price expansion and volatility of the bands would also be expanding at the same time. So yeah, the more questions you have, the better. It helps me explain this stuff to you guys because I do think that it's very important for people to understand, because this is the missing component to almost. I have seen brilliant traders and miss really badly because they're not paying attention to what I think is one of the most important components of the 4 pillars of trading that I've have explained to you, which is trend, support and resistance, volatility, are all basically on equal footing. They must be looked at equally, and that informs momentum. I think momentum, being the 4th major pillar there, it's derived from those first 3. So that's really where we need to pay attention. By the way, Roka, I just saw, I'm going to read up a little bit more, but I want to answer this right away for you. The VWAP bands are fine too. You can actually use BBWP with that as well. Same principles, by the way, for VWAP bands. It's just a different way of reading the price. So that's a really good question. I can throw it on there and look at VWAP bands from that area, but you'll have to give me a moment. So for example, okay, bands then compress price. Like for example, Bobby says, like for example, what are the conditions to enter a trade based off the Bollinger Band posture? This question is better place. This is a better place when we talk about trading setups and stuff. All right, so your best trades are going to come on volatility expansion. Now, volatility expansion is not going to be the same as band volatility expansion. So we are getting volatility expansion within the bands now, but they're in a compression phase, right? So it's more likely that the volatility to the downside is going to get picked up, and then we're going to see a compression and then re-expansion of the bands and volatility at the same time. So those are the trades that you want to take. Those are typically on a daily time frame going to be swing trades, but you extrapolate that down to lower term time frames to get your scalps and stuff in. So we have compression of the bands, we have supports holding, we had a nice swing and then a move that took out the highs here. This was the easy trade. We have a close above the upper second. Yes, you have to be aware that there's overhead resistances and all that good stuff, but it was realistically, we know where the big overhead resistance was the all-time high. So in that case, you're paying attention to the expansion trade, and you take that expansion trade until you get, whatever your criteria is hit, whether it's a specific level that you're looking at, a specific price point, you can do that, or you can be looking for highs and lows on a swing basis, and some other exit conditions, or risk to reward ratio. Like what you should be doing is calculating your risk to reward and taking your profits based on that if you're going to do a swing trade off of something like this. So, and that's where you have to define your RR ratio. You know, 1:1 is not really where the general where you should generally be looking, but you know, 1 is to 1.5 or so. And you can see that it's the compression to expansion is really, I mean, that was the trade on Bitcoin as well, right? So like you go to the 15-minute chart, the compression to expansion phase was a fairly easy trade back to the highs in the very low term time frames. And then we had not really like a real squeeze like this guy over here that got picked up, but you know, it was more of breakdown below like the lower second that also breaks and closes below the lows. You're looking for things to head back to support level by level. Those are the easiest trades in all of, I mean, because you're incorporating trend, you're incorporating support and resistance, and volatility is giving you the confirmation that trend and support and resistance are going to get continuation. And then you can see that reflected in momentum. I mean, you can just look at the momentum right here. It was down. So, I mean, it was down this whole way. It accelerated in the last bits. I mean, you see the biggest moves typically for a regular stoke in the overbought and oversold zones or at the edges of them. So you can look at the hourly as well. Hourly was giving it away. Compression, failure at the upper second, take out the higher low. I was already, you know, taking out this low. You're looking, you know, down further into, you know, this support zone. So compression to expansion. Get a nice compression, start closing above the upper second. You get yourself, you know, targeting these lows over here. You made that trade for a scalp on the hourly. So that would be your compression phase. Spike the lower first, which is also right into this support structures over here with all the wicks coming in. Closes above the upper second. I mean, you could easily just take that trade right back to this low over here and you hit it easy peasy. We're getting another compression on the hourly as well. So yes, it's showing expansion, but it's right around the basis. So you're getting a band compression. Yes, volatility remains high within the bands in terms of it's kind of moderate. It's at 50. And then we just come back to it when we see an upper second breach or lower second breach. And in this case, you need to see the highs taken out on the upper second breach. You want to see expansion past the highs of 44.8 to go test, you know, 45, 45.5, 46, so on and so forth. You want to see it, you know, get below the lower second, take out that weekly to go test the lows over here at 42.8 to the low here at 42.5 again. Possibly then, you know, you're looking in that 42 to 41.8, possibly the lows, you know, thereafter. You just take it one step at a time. So let's let me go back to Bitcoin here. 15-minute. So I mean, Bitcoin right now in the 15-minute, yes, it put in a really big swing high of this high, and it's a lower high at that. We're looking at this local trend. Until this low at the lower first gets taken out, it's up and to the right to keep testing. Lower first is coming in right at this prior low. Now that's right here, and that is at 43,450. So below there, then we're looking right back to this this low on the 15-minute chart at around the lower second, and go figure, it's at like 43.3 to the wick lows at around 43.1 to 43K or so. Then below there, we're looking mid 42,000s at the wick. All right, so let me go back and hold on. I lost my place in the chat here. Okay, I got it, because I want to believe that it needs more than just a pinch. The lower second or lower third. I believe it needs to close back in. Even then, there's some more conditions. Look, you can set your own conditions based on the bands. Just make sure you understand what it is that they're doing, what price is doing around those key levels. Like the most powerful levels for the bands are going to be, the most powerful levels of the upper second and lower second. I mean, that's your traditional Bollinger Band readout, right? We have the triple band set up because of mean reversion and compression and expansion, and where the levels of the bands line up with support and resistance is going to be the most important stuff. Okay. Bollinger Band expansion begins to occur on closes above the upper first and or lower first. You'll start to see expansion start to begin. Aggressive expansion of the bands occurs on closes above the upper first and below the lower, above the upper second and below the lower second. And then we have Roka wanted me to look at the VWAP stuff. I'm not really sure what he's asking though. Look at the VWAP anchored at March 10th, 2023. Where's my anchored VWAP stuff? There it is. So this would be, it's right around the basis of the monthly. So you have confluence. I mean, that's if the upper first is lost. Then it's basically come back and sweep the lows around the 27, 3 to 5 area, which is, 27,000 is where the basis band is. Anchored VWAP from that low, which is the $19,500 low, which is at the lower first, coming into it's in a key area. It's at the basis band. So yeah, there's confluence there. Do you have any questions about it, or just wanted my general thoughts? Yeah, I mean it's got confluence. I mean, if I was going to really pull a VWAP though, we're going to anchor it from back here at the actual macro low, and that's where you're getting. It's coming in between that basis and lower first. But one of the things that you should note here is, for instance, if you pulled the anchored VWAP from like the lows in 18, you'll see that it was dropped in 19, but that was a lower high swing. We haven't yet seen this lower high swing just yet of the this was the first lower high. We've already had a lower high in our bear market here. This is the first lower high. We didn't get a swing of the lower high. So you usually only get one lower high in your bear market, and then you get an impulse through it. Like, let me go back and and this is true of regular assets and indices. So got higher high, higher low, lower high. Then we get a bit of a downtrend, and then that breaks that lower high, which also breaks the higher high in a close. We had the lower high, and then it was a matter of coming up and breaking that lower high over here. Prior to that, it had the lower high down here, but that was on a swing basis only. Once it broke it ran right to the all-time high. So I would not necessarily be looking for something crazy to happen where it dumped off to where I would put the anchored VWAP, which is off the actual low, which is coming in at like 23,000, 23.5 or so, which is a major area, to be fair. That's the high side of the lows, and I mean that's what was tested back here in 2020 was the high side of the lows. There's VWAPs coming in right at the high side of the lows. I mean, technically there is a little step down from there, 20,500, but it's by that we're already into lower first territory at that. And back here, this was this is reading because it's anchored. It's reading that bear market low. All of this price action after has influenced this, but it did go through it to the lower first, to be fair, but we've already seen lower first taps. I'm not really looking for another one until unless we see a swing of this high that fails, and or swing of the all-time high that fails, because I don't even think a lower first half is going to happen unless it's going to happen right now, first quarter this year. That's my take. It would have to happen first quarter this year, going into second quarter, or else I think it's going to be too far away. That's just an opinion. I don't. That's not. That's not a given, obviously. Price can do whatever the hell it wants, right? But we have pretty tight parameters and conditions for where price is going, and we've all been very, very accurate here using those conditions. Lots of people jokes. That's people, the coin. People. Lots of tribbing jokes going on in this other chat for TRB, the coin, not the act. Settings, look at the daily. Sure, my apologies. It's just easier to pull the anchored VWAP. I mean, we could do the same thing. Just pull it from the monthly and then go down to the daily. My apologies. I didn't realize that's what you meant. But yeah, I mean, we can pull this bad boy here. You can look at the daily. I don't think it's going to make a difference. Or, well, no, it does. You're right, it does. 30K. Yeah, you know. Yeah, it does make a difference, actually. My apologies. Wait. Does it? It does, but it's a $2,000 difference. Okay. I mean, if you're going to do an anchor VWAP, it's coming into the high side of these lows over here, and then it's right around this breakout before this crash down to the last major low area. Could that be tested over time? Absolutely. We'd need quite a bit of expansion to get there. You know, if we were to see, you know, this structure taken out, I mean, pretty simply, if it's an area of interest that you're looking at, you know, we need to see at minimum the closing structure here broken down from, then the lows broken down from, and then you're looking to the high side structure over here, you know, somewhere around here, and then you got to drop this low of the move up to do it. So, I mean, it's basically dropped 33,000, 33,500 or so, which, by the way, is, you know, band levels of interest are coming in right around there. That's the weekly basis band, you know, and when looking at the weekly basis band versus that VWAP, which is going to adjust down for the weekly time frame, you know, it's somewhere in that zone, kind of bracketing the higher low on the weekly. So yeah, I mean, it's valid to be looking there if those specific conditions to the downside are met. Yeah, absolutely. It is something you can use to gauge. This big sideways and up consolidation is going to be the main thing to be looking at. Obviously, if this local consolidation does resolve and step its way down, you know, right now it is, you know, being above the basis, it's more biased to the upside. You can also use rolling VWAPs if you're interested in using rolling VWAPs. So you can go to the indicators and you can use and you can see that rolling VWAP is right here at the basis. You're going to see that it often is going to be smoother. As an indicator, and then you can go in and customize it if you like. So you can do the multiplier, which is off right now, days, high, low, close 3, default settings out of the box. You can see that it's lining up with the basis and sometimes the lower first, sometimes the second. You're not getting, any of the information about expansion and contraction here. And you can see it did govern the high over here, it governed and picked up the low over here, swung over here, and then expansion past it, that kind of stuff. There's a lot of different tools that you can use for Confluence, at least locally, and extrapolate that out to the weekly and compare it, right? So right now the weekly's at 37,500, which is right around the SILA consolidation. That's that 37.7 area at the weeklies, down below 39, the 39K weekly and the monthly at 38.5. It's next support area below where price is trading basically. So yeah, you can also do this in a band format as well, and it'll paint like Bollinger Bands. You like when people explode? What are you talking? Oh, the people, the coin. Ooh, you gotta be careful, buddy. I'm being hailed. Dude, you're literally in the chat. You just can talk. You don't have to call me on my phone. Is it really that important? Or are you trolling me? Okay. Yeah, JR, FBI has entered the chat. If I say FBI too many times, they will enter the chat. What? I'll route that right through Google headquarters there. Go right to the FBI help desk. You're inadvertently gonna get me raided with your discussions here. Yeah. I get swatted because you're mentioning the coin people exploding, the cryptocurrency people exploding. All right, so somebody mentioned that Fink is on TV and all this other stuff. I think Roka might have mentioned it up top. I'm getting some more mentions of it over here. Yeah, I'm not interested in it. It's all stuff we already know. It's hype. It's hype levels. Hitting people getting hyped. Let them get hyped. We're watching charts. We got everything we need. Look, I do want to point this out. So a lot of people are like, well, you're not going to be able to predict the market and the charts aren't going to matter when the ETFs launch because, they can just dump it as far as they want or pump it as far as they want, right? So this is a big narrative that's floating around right now. And my counterpoint to that is, gee, that's funny because in traditional markets, like on Dow, for instance, we called the low. We also were looking for, we called the low, and this was a big macro low, especially when you're looking at the monthly. This is a macro low down here. We called that. We called the higher low areas around the basis band, and this higher low in particular that took out this high that it would lead to the all-time high and higher as well. And there's way more liquidity in Dow and NASDAQ and SPY than any of these Bitcoin ETFs are going to have. So like this notion that like, oh yeah, throw the charts out because all the money is going to manipulate it all over the place and your chart's not going to matter. It's just astrology for men and women. Astrology for men. Women already have the astrology side of things dominated. So look, it's not. It's perfectly logical explanations for the movements of the auctions that we are observing, and that's all these are. Is it's a literal auction. So, and you can absolutely predict areas of interest. You're not predicting price. You're predicting areas of interest to be looking at, and setting conditions based on those areas of interest to the upside and downside. And that is not hard to do, because that's how order books work. You fill asks, and there's participants trading, buying and selling on the upside and buying and selling on the downside. So, yep. Yeah, if it really was astrology for men, then we wouldn't literally code, all of these things into the algorithms that actually manage most of the market trading and liquidity handling. It's still handled in large parts and by humans, and that's not going to change. I mean, there's completely automated market makers, but that's all defined. All the parameters are going to be defined by human beings, right? And risk management departments. Is there AI and programs that help with all that? Of course, you need those tools at your disposal. But ultimately, you're asking, is there a time and place when I think that it could just be all AI driven? Yes, but AI and the parameters set in AI and is going to be, those parameters are still going to be defined by you and I. True, look, it's a good illusion. LLMs are good. It's a good illusion. Your human based. It's all about data sets. It's all about the data. You can get an LLM AI and feed it the data that, the data sets that you want, and have it trained on that data set, and it'll be hyper specialized in that data set. If you want to have it, allow that particular, it's because it's a program. Yeah, it's a program. Yeah, now I don't buy into the whole generalized intelligence stuff and AGI and stuff, advanced generalized intelligence. Nope, I don't. I think it's good marketing though. Yeah. I get people that argue with me about it all the time. Yes. It's just not, it's awesome tools. It's far faster and can seem far smarter than a human being, but it's all defined by us. Yes. Even quote unquote AGI. Yeah. Can it think for itself? Well, in a way, it gives you the illusion of thinking for itself, because you're allowing, the checks for that and the massive data sets for it to go and pull from, and then I can give you the illusion of it. Sure. I'm sure that there's already stuff going on behind the scenes that we don't know about, whether it's skunk work projects, DoD, or at some of these privatized companies that are being sponsored by the DoD. Yeah. Okay, Roka. Yes, there's moon phases, and there is dates and times, and there is actually, you can really do astrology on charts, and the main reason why is because of the way that our dating system works and the calendar system works. So, and how it's based on the cycles of Earth around the sun and the moon and the planets and so on and so forth. So I mean that this is all relevant and all connected. So yes, you can absolutely find confluences, especially with the dating system as it lines up with moon phases, for instance, and seasons, right? Because you're going to get liquidity moves based on how we structure things around certain dates, right? Quarterlies and bi-yearlies and so on and so forth, and even weeklies. Yeah, it's cyclical. So absolutely. That's where you're getting a lot of the astrology from men assertions, but it's an auction. You can look at the auction and you can figure out what's going on. Surely not with Fibonacci numbers. Fibonacci numbers, it's math, and it's a number-based system that you're trading with, right? So Fibonacci is going to work. The math works. Yeah, it's and for those that use M pivots and S pivots and R pivots and stuff like that, hey, guess what? You're using fibs. Congratulations. You're using a version of fibs. Have I looked at astrology on weed? I'm not sure if you mean smoke weed and then do astrology, or if like I want to use astrology to grow really good weed. Like, I'm not really sure what the oh man. I see. People I rarely smoke these days, says one person. Look, like, it's legal in many places, especially even here in the United States. So, hey, if you partake, that's cool. I mean, some people like to drink an alcoholic beverage every once in a while. Maybe too much. There's always too much of something. I have no problem with the weed smoking population. I may or may not have partook in that myself for a very long period of time in my life. I do think that if you're going to be charting and dealing with financials, you should be sober and clear-headed. Oh God, I've got over here. If you want to get really good at charts, just do a whole bunch of Adderall. You're basically one step away from just doing math, man. Like, yeah, basically. Yeah, I would not say, look, if you need performance enhancing drugs to chart, maybe just, learn it, get some good sleep, drink plenty of water, eat some food so you're not famished, and then have a clear head going in. Be emotionally in a place where you feel comfortable as well. It's very difficult to trade even if you're one of the best traders on the planet. If you are in an emotional place that is not where you're not okay, I would also avoid trading. Even if it has nothing to do with charts, even if it's just something in your personal life, you do want to make sure. And trading often settles people down. It allows a lot of people. I've trained a lot of you guys, publicly, privately. For those of you that are in industry for certifications, what you often will find is that you have to come to terms with yourself and your emotions as a person and how you handle situations, and trading will expose you in one way or another. And it's very important that you learn how to handle yourself. And in many cases, people who stick with it find that they become better emotionally at handling their emotions in just general everyday life in many cases. And then there's some people it completely breaks, even though they're good at analysis. And that really comes down to, it's psychology is one of the biggest factors in trading. When you're observing an auction, you're either going to get excited and all emotionally involved and riding the FOMO train to the upside and downside, and which causes you to ignore logic and what you've done and throw plans out the window. So I mean that happens to some of the best in the industry. That's why you have to have a good system that you trust. What you're seeing and the system is sound. You've back tested things and you've built a trading plan around that. And you can build a lot of different strategies, and my strategies have changed over the years depending on what I'm trading and why. Yes, I 100% agree. I got a comment over here that those in the public chats didn't necessarily see, and just so you know, there is no like premium group. I don't have any paid stuff. This is just for people who, from where they are, they're at work, they're in a prop shop right now, hanging out with us. This is actually kind of cool stuff, but they don't have access via their network to watch YouTube, go to Twitch, Kick, or any of the others. You guys might be able to go to X though, huh? So yeah, when I am streaming on X, you guys can join us then. We don't have to have this separate solution. Okay, cool. Awesome. So I will try to work on that then for Monday. Then, yeah, then you guys can come hang out with the others here and you can offer your insights to the public. Yeah. I mean, within reason, obviously. Can't go giving advice, right? NFA and all that. Yep, cool. But what I was going to say is, somebody had just mentioned, like, they feel like they became a better person in general after learning to trade and manage their emotions and going through the process of learning it and having to deal with the emotions that come along with trading and trying to gauge and stick to your plan, and when plans don't go right, adjusting and that kind of stuff. So they were, they're just kind of affirming what I had said, that I think trading can be life-changing for some in a very positive way, not just monetarily, but also for emotional well-being and health and understanding yourself. As long as you're driven to improve, yes. Otherwise, it will destroy you if you're not driven to improve. John Stewart said, in character on Half Baked, that everything's better with weed, on weed. Yeah. Hey, definitely have fun, right? To end up like SPF. Oh, Adderall? Yeah. Well, that's where, that's why there's no real performance enhancer for trading. It really does bring out the core of who you are, and it will expose your character flaws to yourself, right? And then you have to learn how to deal with that. Obviously, he did not, and greed was what took over. I agree, Roka, with what you wrote there about CZ and SPF. Yep. Bobby says trading is the best life lesson one can get. I agree. I mean, you should have a good base to start from, but yes, I agree. And I think that anyone can learn to do it. It is not easy. It is one of the hardest things you will do, mainly because of that emotional piece. But once you once you're emotionally dead inside, it doesn't matter. I'm just kidding. You will still experience the same emotions. It's just about how you take care, Cheryl. I'm not into purchasing people, but you have a good one. And I don't mean the cryptocurrency. I mean actual people, because that's human trafficking, and I'm against that. Just so you guys know that can't read the chat, she's saying that she had to go. She said, I need to go eat. Bye, guys. She meant to say BYE, but she said BUY. I mean, who knows? Maybe she's going to buy some guys. We don't know. It's a mystery. Yeah. Cool. What do I think about the ETFs? Oh, you're fairly new, huh? Yes, you are. I don't think I've seen your name before. What do I think about the ETFs? I think that it is going to be an overall good thing for the proliferation of Bitcoin and the awareness of Bitcoin to the masses. In terms of price, I think that it's a lot of liquidity coming in, and we're going to see things in price that you may not be prepared for. It's not something that we can, I don't think it's even worth predicting. On the high side, I think we pulled up to like 150K or something like that. But that's, that's just right now, as things stand right now. It could go much higher. It could swing the all-time high and come back down. We don't know. The price has to meet the conditions in order to move, right? Absolutely, I will get into charting longer-term projections as we see things develop, especially after an ETF does get going. After they're approved and they start trading, we're going to evaluate that stuff. Yep. There's lots of trades to have in between now and then, and even when that begins, when that process begins. Yep. People is for buying. People are for buying. Well, the cryptocurrency is. I mean, if you're a member of the United States Congress, you're pretty easy to buy, as it turns out. Call back to SBF and the charges being dropped against him for campaign finance. Spin, you make a very good point. Yes. Bitcoin got to $69,000 without an ETF. Just imagine how high it can go after. Yeah, absolutely. Absolutely. I am very bullish on Bitcoin, as it turns out. It's kind of really the main thing that I care about right now. Now, yes, I obviously chart other markets because I trade other markets so that I can get more money to buy more Bitcoin. And also live my life. Agreed. Yep. Spin says 10K buys a congressman. You probably need more than 10K for a congressman, but 10K buys a lot of votes. Buys a lot of ballots, I should say. Oh, 10K buys a lot of congressmen, according to SBF. Yeah, it buys local politicians. He was everywhere. He was funding everybody, but massive contributions to, both parties, but one party far more than the other. Obviously, that party being the DNC, but. I mean, they're both just as guilty. I mean, just look at Unusual Whale's report on the top money makers in Congress. Just basically trading insider information. It's Republicans, it's Democrats, it's I think there's even an independent on there. There's not many independents in Congress right now, but it's terrible. They just approved the 19.4b amendment for Valkyrie. Sorry, not approved. It's filed officially. Yeah, that's their last steps. I mean, you're not going to see anything trade today. The market's closed. So next week we'll probably start seeing the rest of this get wrapped up, and then you'll see creation units being filled, and then you'll see the trades being available through your brokerages. I mean, they all have their DTCC filings in, so I mean, it's just a matter of cleaning up the odds and ends, and so that they can, offer it on the exchange, right? This is the 19.4b amendments. This is literally, Bobby. This is just they're wrapping things up. They're ready to go. This is ready. SEC is ready. The ETF filers are ready. It's just it's the minutia that you have to do in order to get things on the exchange. They're already listed with DTCC, so they have their tickers associated with their DTCC numbers, registration numbers, and then that now is just a matter of it getting listed on the exchanges, and then available to be traded through your brokerage accounts. Or whoever you use, Fidelity. A lot of people like Webull. I use Webull, but I also use Fidelity. I use a few others as well. Webull is really handy for options, just because the app is slick. But if you want to dive deep into everything, you know, good old Fidelity, the ones who literally are an AP, with the head of Fidelity going, "Oh, Bitcoin is terrible. Should get rid of it. Ban it." Like, really? But you're an AP? I want it banned. Let's come out and FUD it a little bit. Yeah, cool. I mean, that's good. We kind of expected the 19B4 amendments to be in sometime this week, early next week. So, yeah, good. Of course, you're gonna get a, you know, sell the news people come out of the woodwork and like, oh, just pay attention to your chart. It's a buy the news event. It's a sell the news event. It's a this. It's a that. And it's a me, Mario. Who cares? No one cares. Mario's gonna come in and stomp on you if you care too much. And Mario's gonna eat some mushrooms and then stomp on people who care too much. The hourly on Bitcoin, the way the higher lows are rising inside the bands, does give you a target, or is that something you're not until something you ride until it loses the basis again? Bobby, it's going to go up and it's going to go down. Easy peasy. When looking at the hourly, for instance, one thing you do need to be aware of is any closes below the wick low and the open here, painting a 3-candle high structure with a swing high that swept the liquidity up here. But right now, I'm not, you know, it's just pay attention to support and resistance. We got this swing high and close open structure here. Above there, we look to the current swing high and then the close open structure right above it at, you know, 44.5 to 44.8. Above there, we're looking for expansion. That would be right above the upper second. So we'd be looking for expansion up into this low side structure again. That's 44.8 low on a close. And then we're looking to 45, which is just above it at this higher low to equal high. Swing up here into this compression. Then above this last swing high at 45.530. Then we're looking for the highs of this run somewhere around 46k to the monthly above it 47. So that would be expansion. If it does start to lose the basis here on the hourly, then we are looking towards the open and the previous hour's wick low here. So the open was coming in at 43,625 or so, and that wick low is coming in right at that area. So if you do see a closure below there, that would paint a high. This would be a lower high close on a swing. Realistically, I'm only looking for consolidation until I see closures below the lower first and lower second from there, though. So 43,500 at the lower first to the lower second, somewhere around 43.3 below there. Then I'm looking for the wick low area, somewhere around 43,150, 43k area, and then the swing down here, closest down here, just level by level, because it would be expansion below the lower second into these areas of interest down below, right? And you can see that the lower second is lining up with this, you know, swing high and closing high right here from, you know, this little march up that came in off of the expansion here. It put in a high that then caused the compression to re-expansion to retest the highs. So I hope that helps explain my thoughts on it. Momentum's pointed up, obviously, because it's, you know, we're trading above the basis, starting to make some swing highs. A high is not in on this current hourly move. A swing high might be in, but a closing high is not. Yep. Yeah, I agree. So, at the moment now, what you're looking for, so one of the other comments in the non-public chat over here for people that cannot join the public streams is that we need to see the downtrend break on a close. and downtrend will break on a close technically above this closing high right here at 44,180, but you need to see the wick high taken out as well, the swing high, to get it to move on. That puts it above the upper second. So we're talking about this close right here breaks the downtrend. Technically this close would, but you know, we would see slight expansion above the upper first. So we're looking at, you know, 44,026 bucks. You need the swing highs to get taken out here, and those line up with this close open over here at around 44,150 to 180. Above there, you need to see the 44,350 area taken out, which would put it above the upper second. Then that's targeting the 44.8 region highs over here, which is the low over here. Above there, it's regaining the consolidation at the highs, and then you step up your criteria to, you know, level by level to look at the highs. Yeah. Same for the lows. Break the most recent lower low on a close. Then we have to be aware of the swing low to the prior swing low, and if there's closes in between there, which there is, around 42,800 to the wick low there at 40,650 or whatever, and then the actual lows, and then that giant wick low down there. 42,600, sorry. 40,600 is down here. Sorry. Yeah. Closed. Taken out means closed. If you just swing it, it's a swing. Taken out is on a close. If you just get a wick above, that's a swing. For this time frame at least. Might be closes on lower term time frames. But it would, if it retraces back down, you're waiting longer because it would just be a swing. Like this is just a swing of this high. We need to see a close or see this area taken out on a close, which would be above the upper second, getting expansion. So right now, it's basically 40, above 44, whatever this is, 150 or whatever this, 44, yeah, 180 to 150 to 180, depending on your exchange. And then it needs to take out the swing high here, which is coming in at 44,345, 350. And then you can look locally for a retest, because we have a retest of this prior low. If it regains it, then you step it up to, you know, 45, 45.5, whatever other numbers are up there. The consolidation at the highs, basically. Yeah, all the 19B -4s should be in today. You're likely going to hear it coming out all throughout the rest of this evening into the weekend, probably, of who got their 19B, and whatever didn't get done today might be done, you know, early next week. And then I would expect, if this is being done, you know, today, and we're hearing about it today, probably just wrap things up early next week. We might even see a listings begin, you know, sometime next week. Should be very good for them and us, because it's going to be tradable. The event will be tradable. Guess what? Doesn't matter if it goes up or down. The event will be tradable. You do have to be careful, because it's going to be probably whipsawing, at least in lower term time frames. But we'll be able to derive direction very quickly after, once dailies start coming in. Yeah. You know, a lot of people making a big deal about BlackRock being the one that's kind of pushing everything forward. Look, there's a ton of ETF filers, and there's going to be a ton more. This is not just going to be the 13 or whatever that are there, 14 now. Had some new filings as well. So, and there's going to be more filings. There's more people talking about applying, whether it's going to be cash creates or in kind. You know, there's a lot of that being floated right now. It's exciting times. I mean, can't deny that. It's exciting. Whether you like these big companies or not, doesn't matter. It's exciting times. If you're a trader, this is exciting. If you're a Bitcoiner, it should also be exciting because this is how Bitcoin infiltrates the financial sector writ large, writ large, even with my voice breaking up there, which is my cue to start wrapping this up. If there is like a question or two that anybody has here, you're more than welcome to pose it before I begin wrapping this up. If not, I'll wait a little bit here for a moment and see if anybody has any other questions. And if not, then we're going to wrap this up. Will I leave the tunes on? Yeah. Yeah. If you want to hang out and listen to some tunes, they'll be playing. Some royalty-free synthwave for you. Sure. Yep. Okay, cool. All right, guys and gals. I want to thank you very much for hanging out with me today. I hope you have a wonderful weekend. There will be a staring at charts video this weekend. One, maybe two if crazy things happen. There might be some, considering the news that's starting to come out, there might be some bigger players that are currently within the market that want to make some moves. So we'll at least have one, maybe two if there's some craziness. Other than that, I hope you all have a wonderful weekend. I hope that you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. And with all of that being said, Landy out. Take care of yourselves.